There is a substantial risk of loss associated with trading forex, binary options, stocks, or equities, collectively, asset classes. Only risk capital should be used for trading. Trading in any asset classes is not appropriate for everyone. Past performance is not necessarily indicative of future results. No representation is being made that investors will make profits, or will not sustain losses. Before trading in any asset classes, investors should consult with their professional broker, financial advisor, or financial consultant to determine whether trading asset classes is appropriate. Investors who trade in any asset classes should only do so if the capital used for this purpose represents funds that an investor can afford to lose without adversely impacting the investor's lifestyle. No trading strategy or methodology is without risk of loss. No trading strategy is risk-free, and no trading strategy can guarantee profits or freedom from losses. Investors risk losing the cost to execute any transaction, including associated commissions or fees. You should carefully consider whether trading in any asset class is appropriate for you in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and at your own risk. None of the statements or materials in the Auvoria Prime chat rooms constitute a solicitation or recommendation to buy or sell.
Let's talk about a few things, and first I want to talk about the pairs list. As we know that these are the pairs list, Euro NZD has never been on this pairs list, neither has Euro GBP. They are still pairs that many people trade. I'm going to be adding Euro NZD to this list and increasing the entries on it. I'm also going to be adding Euro NZD as a worst performer in the yellow, due to recent volatility with it, as well as EuroCAD. They are pairs you can trade. They do sometimes make great profit, but the worst performing pairs are always going to be on this list for something that is for a higher risk person who understands that losses are inevitable. Also taking a look at this list, CHF pairs are things that I would typically not play around with. And when I say not play around with, I would say that right now many brokers are still offering lower leverage on the CHF pairs, meaning that some brokers are offering 1 in 50 leverage on CHF pairs, meaning that your margin is going to be much less if you're trading CHF pairs. So check with your broker if they are offering lower leverage on CHF pairs. You're not going to want to trade them if they have lower margin right now on your broker. So ideally, try and stay away from CHF pairs where you can. Euro NZD, again, has never been on an official list. It's something we've played with, trial and error, tested. I am going to add it to this list, add it as yellow, and I am going to increase its gear entries much farther than they are. Currently, Euro NZD enters on a gear 2 on swing. We're going to be raising that to a gear 4 on swing and a gear 5 on sniper and 6 on super sniper. We're going to put it up here in the midst with some of these other more volatile pairs such as the JPYs, the USD. It fits up there. It's not really a gear 2 entry pair such as USD CAD, right? So we are going to move EN's entries up, as well as Euro GBP. We'll be rocking. I think Euro GBP should have the same as GBP pair entries. I will verify that though, as it isn't on an official pairs list. But again, I know that some people took some losses with unofficial pairs this week. Let's take a look at the comments here. Reading through. To start the first comment, Jock. GearBox opened a trade where Ghost Gear was on 6, but comment field shows level 7. So, to give you a visual, Jock, let's go to an open trade I have here. I have EuroCAD here. Alright, and EuroCAD entered on 5, and we have 6 and 7 open. Now, if I go over to EuroCAD here, it should say that it's actually saying 3, which means that it was an, oh no, I do have 4 open. Okay, here we go. See, 4 is open. 3 is the highest open in the Ghost server because that's the highest gear open in the Ghost server, Jock. 4 is open in the real market. 3 is the highest in the Ghost server. Does that make sense? That's why you see a lower number there than your entry. So you may have seen 6 here and you see 7 entry. That means that 7 entered and 6 was the highest in the Ghost server. After that, it deployed trades in the real market. So that's why you see that. That's exactly how it's designed. If a trade is already open and you change gear settings, will it update the settings for entering a hedge trade, or it goes by the old gear settings was active at first entry? That's correct. It's going to go based on the first entered trade. It will not take new things into account unless the trade is going the opposite direction. If it's on the same sequence, it's going to operate on the first trade entered. When using GearBox DD calculator, it shows different numbers. I'm not sure I understand what you're saying. We're going to take a look at the GearBox calculator. All right, remembering that the GearBox calculator is based on one pair. This is all one pair. So if you want to understand your risk, you need to multiply by 3. There's a few things the GearBox calculator does not take into account. Number 1 is going to be stop losses. The calculator does not take stop losses into account. Number 2, it does not take balance protection into account. Things calculator does not account for. This is supposed to be a simulation and a tool to help you mathematically understand things. But taking a look at the risk, if you guys are using the normal strategy and risk, let's take a look at what it would take for you to lose all your money. All right, so number 1, if you have a $1,000 account, and you're playing with swing settings, on average earning between gear and 5, okay, that means in order to blow an account, all right, let's just talk about even getting a 45% drawdown. That means that the market would have had to go 601 pips on 3 different currency pairs with no retracement. So if you have a $1,000 account to get a 45% drawdown, the market needs to go 601 pips with no retracement on 3 pairs. Now what's it going to take to blow it? It only needs another 233 pips on all 3 pairs, and that account's gone. That's on a $1,000 account. Now, do you know the likelihood on a $1,000 account of all 3 trades you're going in on, if you're using correlation filter, if you're using all the proper risk management features, the chances of 3 pairs at the same exact time all going 833 pips against you is slim to none. The other thing this doesn't take into account, which probably increases this number, is again balance protection stops taking new trades at 25% drawdown, which means that the chances of you entering some of these next trades, which would get you closer to using your margin, chances are that wouldn't happen. Meaning that you would probably be able to go 1,000 pips because you're not entering some of these extra trades, which are increasing your risk. So 25% by default. That's again if you're using the default strategies that I'm leading with and talking about conservativeness. You also aren't taking into account stop losses, where again, it's going to take losses along the way if it needs to. But the point is, it would take a very big move and you in 3 pairs that all go against you for you to lose money with the normal strategy on a $1,000 account. Now let's look at a $10,000 account. And, I tell people once you go over 10,000, you should typically go 0.01 per 1,500. In fact, if you tuned into last Friday's developer insight call, I did let people know that if you're a conservative user, you should maybe go to sniper mode, or you should go to a 0.01 per 1,500, even 2,000 if you didn't like risk due to the war. Many people continue to turn their GearBox up and run 0.01 per $500, and that's just, you shouldn't do that, or 0.01 per $250, and you shouldn't do that, because again, the settings that I lead with, I have mathematically calculated time and time again to be able to handle volatility in market conditions like what you're experiencing right now. And then, you get through a few good months with aggressive settings, and then one day you're crying and your butthole might be a little puckered because, you see high drawdown that you didn't expect to see. And, I stick to conservative settings for a reason. My developer account, which I'm going to reference an FX book on, is, in what, 5.76% drawdown? Yeah, okay. I can handle a little 5% drawdown action. But overall, again, this account has crushed it since its $10,000 deposit to now. It's conservative. It's not pumping crazy profit, but I've withdrawn $7,500 and I'm up $8,500 hands-free, right? So, again, let's continue to focus on the fact that GearBox works, but it works when you let it work the way it needs to work mathematically. If you increase your risk, you're prone to have a bad day one of these days. But again, so let's take a look at a 10K account. 0.1 starting lot, which again, you could go more conservative than this. And if it was this week, I would have gone more conservative, right? Let's say a 0.08. All right, but let's just say for normal settings, let's just say you're sticking to, not going to a 0.01 per 1,500, but you're going to stick to 0.01 per 1,000. Okay, a 10K account. 3 pairs could go 833 pips against you at the same exact time. You're in 63% drawdown. You hear what I'm saying? You can go over 1,000 pips without blowing that account on all 3 pairs against you at the same exact time. The likelihood of that happening, again, is slim to none. Can it happen? Absolutely. Has it happened in the past? Absolutely. Do we have other risk management features in place to help for this? Balance protection, 25%. Why is this, again, such a crucial feature? Well, my belief is that if you're in 25% drawdown and you do not take another trade, you do not put one more trade into the market, and you have 75% of your equity left to cushion you, you can withstand some crazy black swan events. Yeah, you might hit a stop loss or 2. You might hit 4 or 5. Okay, and I know some people hit between 4 or 5 stop losses on Euro NZD. Well, I want to reference my own personal FX book for this. All right. I hit some stop losses a few months ago. A good chunk of them. They just kept coming. Right? I went from 107 down to 73% on this account in profit. So 107% down to 73% after a bunch of stop losses. We just kept racking them in from July. It was really CHF JPY. It just kept railing me. And the point is, did GearBox make it all back? Did I get into over a 22% drawdown? Is my profit factor still a 2? Have I still won 79% of all trades GearBox has taken? Is my pip count still positive? The answer to all those questions is yes. Did I have 2 losing months last year? Yeah. I did 9.1% and another 2.74%. So you can see this is the losses here. I lost 9% in August, and I lost 2.74% in October. These were stop losses. They got railed. So the point in showing you that is to show you that losses are inevitable. But if the wins outweigh the losses, can you handle a losing month or 2? Yes. Again, if you had some losses, you hit some losses, you lost some profit, you lost 2 months profit, you're a brand new user and you put EN on the chart and lost money, okay, delete EN, don't run EN. And moral of the story, again, losses are inevitable, but if your strategy can manage risk, which again, the developer strategies have proven to manage risk with low drawdown, stick to what works. Don't go reinventing the wheel. Don't go trying to turn this thing up and pump profits unless you're prepared to lose all your money. Now, if you're an aggressive user, it's okay to be aggressive, but have a conservative account too. Don't just have an aggressive account. You should never just have one aggressive account. Have an aggressive account and have a conservative account. And if you can, have a conservative, moderate, and aggressive account if your risk tolerance can handle it. But never not have a conservative account. If you are being aggressive and you don't have a conservative account, you don't have the money to be aggressive. I'm going to tell you that right now, and I'll repeat it. If you do not have the money to have a conservative account, you should not be being aggressive because you don't have the money and you're not trying to build wealth, you're trying to gamble. If you want to build wealth, start with a conservative account, get comfortable with the strategy, and then when you're ready to have some extra money you can risk, be aggressive. But again, if you do not have a conservative account, you should not be having an aggressive account. That just does not work that way. Let me keep reading through the comments. Jock, you're looking at the wrong thing on the calculator. If you go to the calculator, any account below $10,000, you put the account here, small account size. If you put $1,000 here, that's correct. The math won't be correct. It'll show you the 0.01, 0.01. Right, I know what you're talking about. Yeah, 0.01, 0.01, 0.01. Yeah, you don't put $1,000 here. You put $1,000 here. This is for 10,000 and above. So you have start balance 10K, you have small account 1,000. So look at the $1,000 one, Jock. That's where it's small account size. Anything under 10 grand, you put that balance here and you look at these numbers, not these numbers. All right. I'm reading through the comments. Yeah, so Kaylee, I mean, the big thing is Euro NZD has never been on the pairs list. It's been something that we've experimented with. It's been something that advanced users have added, but it's never been an official pair. I've never added it to that list. But now, for the sake of education, I'm going to add it to the list as a worst performer and a higher gear entry. Should we turn off auto trading due to conflict in Ukraine? Philip, that is a personal preference decision. That's all about if you believe so. Again, yourself. You know. Where do we get access to this document? Are you talking about the calculator? If so, I can share. Restricted. Anyone with link can view. All right. I'm going to give you guys this link here in the chat for the calculator. Just make a copy of it. You won't be able to edit that one. I'm in GBPAD and GBPNZD. Should I continue to ride those out next week or close given market conditions? Michael, I'm not sure what strategy you're on with GBP and NZD or what level you entered, if you've hit any stop losses. I personally have some accounts in those trades myself. I'm holding, but again, it depends on the condition. I run so many different accounts, so I will tell you I did notice on my intraday accounts, I have larger intraday accounts that I just run instant entry on all pairs just for data purposes. But I did see that, GBPNZD and AUD railed level 5 stop losses and things like that. But most of the time, on swing, you're pretty much just entering on level 5 or 6. So I'm not sure where you're at on those trades or what level you're at or if any have hit stop loss. So just maybe give me some clarity so I can help give you some guidance. Yeah, Jock, again, if you go to that calculator, you'll see, again, right here, it goes 0.01, 0.02, 0.03, 0.04, 0.05, 0.06, because that's how the broker works. Yes, that's correct. You can't open a 0.0115. That doesn't exist. What is he? Elijah started at 11. Can you explain the difference between real trades, double TP, and ghost trades, real trades? I can explain that. Kaylee, really simple. The best way to give you a visual. You're not going to be able to do this on your VPS, so do not ask me how to access these files because you can't access them. Only I can do this. Oops. Wrong folder. Ignore me. Hold on. Terminal. Common. There we go. Alright. Let's take a look at any pair. Notepad. Notepad. Open me. Awesome. All right, let's take a look here. So, what I'm showing you right now is the Ghost server. So this is where all the trades are that are not actually on my account. So you can see AUDNZD 0, 1, 2, 3, 4. So what Ghost plus Real means is it means it's going to calculate the take profit based on as if it was actually in all these trades. Like, let's say all these trades were actually open on your physical trading account. What it would be doing is it would be calculating your take profit for level 4 as if it had to make up for the drawdown of level 0, 1, 2, and 3. Even if you only entered level 4, again, it's going to be calculating the take profit based on as if these other trades existed and it needed to balance them out and get you out of that trade profitably. Now, let's say you entered level 4 and you were just using real trades double TP. It's going to set a 60 pip take profit. If it has to enter a level 5, a 6, and a 7, it's going to move the TP accordingly. But Ghost plus Real just means that on the first real trade, it's going to calculate as if all these were open. And double TP just means on the first real trade open, it's going to put a 60 pip take profit. And then how it moves the take profit after that is all based on math of the next cost averages and things in the market. But essentially, in the first real trade that deploys on your account on any currency pair, Ghost plus Real is making up for all the ones in the Ghost server, and double TP is just putting a 60 pip take profit. I hope that answers your question, Kaylee. Marco, and a GearBox setup sheet. Yes, we can work on that. You can put that link in the GearBox Traders chat, Philip. No problem in there. Hit stop loss on 2 so far. Are you saying you hit 1 stop loss on GBPAUD and 1 on NZD, Michael? And what level was that, the stop loss on? Can you clarify what level those were? Marco, the math for calculating TP and Ghost plus Real is really simple. It's just, it's going to calculate to make up the difference. So again, if you entered level 4, even though these trades aren't open on your account right here, it's going to calculate the take profit for this trade as if these trades all existed and it needed to make a profit plus get out of these profitably, right? Because let's say all these trades were negative. You just entered level 4 and you have 4 trades above it that are negative. It's calculating the take profit on that level 4 trade as if it needed to balance out those other 4 trades and get out of the sequence profitably. That's how the math works. Gear 6 and Gear 7. Ooh, it's a hard stop loss. But the good news is if you look at the chart, and you know, we can pull up TradingView and look at some charts. I'm down to look at some charts today. So let's take a look at NZD. Wow. Well, yeah, I mean, you guys see this? It looks like the Russian stock market. But taking a look at this, let's take a look at the zone. Oops. Okay, we're in a major spot right now, in my opinion. I'm just scrolling back through time, looking at where the market's at right now. And what I see is a large support or resistance zone, whatever you'd like to call it. Yeah, that's a very sturdy zone right there. Going back through time and time. Let's see where else. Yeah, here we are again. So this is what I always like to do. Whenever the market's done something crazy like this, I like to go back through time and look at where the market currently is and where it's been in that spot before, and take a look at, you know, how the zones hold there. And what I'm really looking at is I'm seeing that we're not in a very unusual, uncharted territory. We're in a place that's been many times. And when we take a look at that, I also see that, you know, that zone has been that zone has been, how would I say, a resistance or support many times. Now, you know, could we break through this support and go lower? Absolutely. But when you take a look at this chart here, you'll just see that, you know, this is a huge drop. We're talking, whoo, that's a lot of pips right there. We're talking a little over a 750 pip move right now, from this top peak right here straight down. I mean, we're looking at this the daily, so you can see there was like a little bullish momentum for like one day, just a little, and then it's really had no retracement, straight down over 700 pips, straight down 750 almost now. So taking a look at that, what I can tell you is GBPNZD, typically the most I've seen it move without a retracement is 1,000 pips. So that tells me that in a worst case scenario right now, okay, what, we can go another 250 pips. All right, we might come down here. Could there be some more losses? Possibly. But what I would tell anybody is if you haven't deployed gear 11 yet, you're not on your max gear, and you could always handle another gear or two. Worst case, you rail a stop loss here, but you take another trade, and it comes up here, and now all of a sudden you break even. You get out of all the trades, and even with your losses, you're at break even, or you're down 1% or so. That's how it sometimes works out, or maybe you're down 2%. But the point is, GearBox tends to work its magic even in situations like this. So I wouldn't stress as long as you're using proper risk management and you're comfortable with your drawdown. If it's under 30%, anytime drawdown's under 30%, I tell people it's okay. Losses are inevitable. You're not in high drawdown. You're not going to blow your account. Sometimes you just got to take a loss here and there, and you got to make it back. It's not always ideal when you want to consistently see profits, but it does happen. All right, let's keep... Tyler, they're saying about the count number of pips for specific gear entry. Marco, if you look at that calculator shared, you can see right here the range. So level 1 enters 21 pips, 2 enters 49 total pips, 3 is entering 80 pips into the move, 4 is 139 pips in, 5 is 209 pips in, 6 is 303 pips in, 7 is 430 pips into the move, 8 is 602 pips, and it works like that. So you can see exactly where the gear entry is in the pips right here, all the way up to gear 17, which is a total of 10,000 pips, by the way, if I haven't let you know. So yeah, anyone thinks any of the pairs are ever going there. That's more if you were going to trade indices or work with metals or, you know, some of the crazier things, which again, we don't trade those with GearBox unless you're a heavily advanced user and you accept your risk and you know what you're doing. Alrighty. I see we got a lot of you all of a sudden here. A bunch of you are anonymous anteaters, anonymous elephant, anonymous grizzly, and anonymous badger, all looking at this document. So welcome, anonymous badger. Each week from the start is 0. All ghost trades are deleted. Correct. So wherever 0 enters is where 0 is. And then it calculates the pips from there, Margot. Where do you see current drawdown on open trades? Elijah, if you want to see your weekly floating percent, just go to GearBox, look right here on your weekly floating, and you can see the UI. It'll show you. So right now it says 6% for me. It is my weekly floating. I'm at about negative $668 on an $11,000 account, and I'm big chilling. As you can see, I don't even have EN open on this account, and that is a developer strategy for sure. Now, for those of you running EN, I ran EN on some other accounts of mine, and yes, I saw the same thing this week. EN went buck wild. So, again, EN's going to go on a worst performers list, not recommended, and we will be increasing the gear entries. I'm going to be releasing an updated GearBox manager, and we're going to be updating all of that stuff. So, with that being said, thank you all for your time. We're going to go right into the week ahead and look at Forex Factory real quick. Let's take a look and see how the upcoming week's going to look for us. So, taking a look, obviously, today, as you guys know, was also NFP. NFP also does crazy things to the market. So you could expect that, right? Today was NFP. It's another reason I did tell you guys last week, if you tuned into last week's call, I told you be more conservative, maybe go super sniper, go 0.01 per 1500 to 2000 for less risk. You know, I gave some of these notices, being that it was a war and NFP, but it happened. Now let's take a look at the week ahead. Tuesday, we have AUD red folder, RBA Governor Lau speaks. We have Wednesday, GBP, annual budget release. You have USD, job openings. Thursday, we got some good red folders on European and USD with CPI, monetary policy, refinancing rate statements, all things that can affect the European currency as well here. AUD again, RBA Governor Lau speaks. And then we have Canadian employment and unemployment change. And preliminary consumer sentiment for USD. So a good amount of red folders this week, as well as a war going on. So with that being said, maybe be on the more conservative side of the stick. And by being more conservative, I mean if you don't like drawdown, go from swing to sniper mode. If you don't like drawdown, decrease your max pairs from 3 to 2. Or if you're running higher than 3, definitely decrease them. If you don't want to decrease your lot size, or not your, if you don't want to increase your entries to sniper mode, and you don't want to decrease your lot sizes, then I don't really know how to help you. You got to do something to decrease your risk a little bit if you want to be more conservative. So either go sniper and leave your lots how they are, or decrease your lots and stay swing. You know, just decrease your risk a little bit somewhere if you're on the more conservative side. Decrease your max pairs. There's a few things you could do. Decrease your max pairs, decrease your lot size, or increase your entries by going to a higher mode such as sniper or super. Those are the things you can do during a time like this, where maybe you just want to be a little more on the conservative side and less exposed to risk of the markets and the conditions with everything going on in the world right now. But personally, me as the developer, I will tell you I'm going to continue running my GearBox with developer strategies, focusing on the best performing pairs, eliminating the worst performing pairs, and maybe even decreasing my lot size or going sniper myself. And I would encourage many of you to adjust your risk based on the GearBox calculator you see and come up with any decisions you may want to make in regards to that. The other thing I'm going to say, data is based on one pair, So multiply total DD times max pairs for accuracy. Adding that right here. Alrighty. With that being said, I want to thank you all so much for being here. Let me read the chat a little bit more. Philip, it is all based on your preference, whether to decrease from swing or increase from swing to sniper or to decrease lot size. It's all personal preference. Personally, they're both pretty similar. Swing is just going to make sure you still get more trades. Sniper is going to take less trades and have less risk. It all really kind of depends on your personal preference. Do you want to see more trades or do you want to see less trades but with the same kind of profit potential? What would you recommend for swing settings on a 4K account in terms of max pairs? I don't increase my max pairs beyond 3 anymore, Elijah. You know, in the beginning I used to run moderate accounts with 5, 6 pairs running, 4 pairs running, but these days I just run 3 max pairs all around. I'm not a fan of being exposed to more than 3 pairs at a single time because, again, the markets can do crazy things, and if you're in a bunch of correlated pairs, you know, things can get wild. So I just stick to running 3 pairs because I want the least exposure to the market as possible while making profit. Yes, awesome. Well, with that being said, everybody, thank you all so much for being here. I know this was a longer call, and I appreciate every single one of you that shows up live to these and actually watches these calls. So thank you again for being here, and thanks for being a loyal GearBox customer. And I'm excited for us to continue to show the power in GearBox during volatile times where many products will fail, many softwares will fail, but you will see GearBox will continue to thrive and optimize. And there's many more enhancements coming to GearBox soon too. New settings, new features, things I haven't even talked about with many of you yet, but just know I got some brand new files in my my Telegram right now, and I'm going to be going around and playing with some new updates and things that I can't wait to get out to all of you. So thank you again for being here, and look forward to having another phenomenal trading week ahead. Even though I know this one maybe wasn't the most phenomenal for many of us, in my opinion, every trading week's a phenomenal week because we never lose, we only learn. But with that being said, thank you all, and see you on the next one.
There is a substantial risk of loss associated with trading Forex, binary options, stocks, or equities, collectively, asset classes. Only risk capital should be used for trading. Trading in any asset classes is not appropriate for everyone. Past performance is not necessarily indicative of future results. No representation is being made that investors will make profits or will not sustain losses. Before trading in any asset classes, investors should consult with their professional broker, financial advisor, or financial consultant to determine whether trading asset classes is appropriate. Investors who trade in any asset classes should only do so if the capital used for this purpose represents funds that an investor can afford to lose without adversely impacting the investor's lifestyle. No trading strategy or methodology is without risk of loss. No trading strategy is risk-free, and no trading strategy can guarantee profits or freedom from losses. Investors risk losing the cost to execute any transaction, including associated commissions or fees. You should carefully consider whether trading in any asset class is appropriate for you in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and at your own risk. None of the statements or materials in the Auvoria Prime chat rooms constitute a solicitation or recommendation to buy or sell.